So, good morning or afternoon, ladies and gentlemen, depending on where you're joining us from. It's a pretty miserable day here in the UK, so I hope the weather is better for you. But thank you very much for joining this webinar. My name is Alex Rolfe. I'm the Managing Director of Payments, Cards and Mobile. I'd firstly like to thank ACI for sponsoring this webinar and to Arvato and Klarna for joining and sharing their insights as well. So before we start, I just want to do a tiny bit of housekeeping before the webinar. If you're experiencing any technical difficulties, then please use the Q&A box in the portal and one of the team will respond as quickly as possible to help you get that issue sorted. Next up, the webinar will be run as a series of presentations and panel sessions, and there'll be a Q&A for the second panel session and at the end as well. However, please do feel free to ask your questions as we go through, and we'll do our best to get as many of those questions answered as possible. If your question relates to a particular slide, then please note this down in the question so we can access back to that slide quickly and talk around it if that's what's required. Finally, the content of the webinar will be shared with you after the event, so you will be able to listen to it and see it again and share with any colleagues that have been unable to make it today. So, the subject today is, I think, of critical importance and becoming more and more important as we move along. The consumer expectation around payments has progressed massively as we become more used to the kind of seamless experience that we get from other industries across our mobiles and tablets, and that's particularly led by big tech. This has led to difficulties for retailers and their payments providers alike. So to talk through this today, I'd like to introduce Richard Jolly, e-commerce fraud and omnichannel from ACI, Jan Florian Richards, Director of Strategic Partnerships, Arvato, and Matt Scott, Senior Commercial Manager at Klarna. And introducing Richard first, over to you.
Thank you, Alex. Richard Jolly. I've been with ACI now for just shy of 4 years, and I'm responsible for EU business development for our Pay on Gateway product and RateShield, our risk management product.
And I'm Jan Richard, so I'm with Arvato for 11 years now, and I'm taking care of our strategic partnerships such as ACI also, and have been into payments for about a decade by now.
And I'm Matt from Klarna. I've been with Klarna in the UK now for just over 4.5 years, and I'm responsible for both new business growth, so growing the existing portfolio, and also partnerships, including the ACI partnership.
So, Richard, if we look quickly at the agenda, we're going to run through the culture of innovation, merchant innovations, PSP innovations, and then we've got, as I say, some Q&A and panel sessions as we go along. So, Richard?
Wonderful. Thank you, Alex, and thank you for everyone for taking the time to join today's webinar. Look, we are genuinely privileged to be living in this time of extraordinary change within the world of payments. I mean, the way we pay for today for goods and services is quite unimaginable compared to 20, 10, or even 5 years ago. There has been dramatic changes in consumer engagement at that critical time of purchase. The mechanism for money value transfer, the blurring of E and M commerce, contactless payments, mobile wallets, the Uber experience, some of this innovation isn't even 5 years old, and now it's almost become common practice. So simply framed, the view is that organizations in any industry need to innovate. They need to innovate not only just to compete and win, but to survive or face unavoidably rapid and certain decline. And this statement is probably even more pertinent within the fast-moving payments market, which we're all involved in. It is an indisputable fact. And that's led us at ACI to effectively sponsor this research by Ovum, because we at ACI wanted to better understand how our customers must and are adapting and what challenges that we need to confront and accept to succeed in what is an ever-increasing digital world. So just to recap and explain the methodology adopted by Ovum, they conducted 1,200 interviews across senior decision makers in banks, PSPs, payment intermediaries, merchants, corporates in North America, Europe, and Asia Pac. And the objective of this research really was to understand where those organizations are across the value payment chain in terms of innovation. We wanted to understand the need of innovation and what changes are necessary to position us at ACI and them for future success. For example, do they have a chief innovation officer? What's their corporate mindset? What's the inputs into the innovation process? Furthermore, we wanted to understand, number two, how are the organizations, how are they shaping themselves in terms of responsiveness to innovation? Do they see innovative trends as an opportunity, or do they perceive them as a risk? And finally, number three, the outputs, the results. The researchers suggested that organizations might indeed be culturally set up for innovation. They might be agile enough to respond to merchant and consumer change, but are they delivering demonstrable results? So the interview questions were aimed to benchmark if and how organizations within the payments values chain are setting themselves up to deliver and inspire innovation. And those results were plotted on a culture of innovation index. So in this webinar, we'll continue to look a little bit more closely at the results for both PSPs and the merchants that they serve. So what this research identified was really 5 types of organizations across the payments market. Number one, we had the emerging companies, and they have a strong cultural and organizational emphasis on innovation. Now, in most cases, a very clearly defined technology strategy, but they were still behind the market in terms of execution and delivery, that the output. They might be guilty in some cases of feature creep or aspiring to deliver notionally what you might describe as the killer app. So the view is that, look, they're on the right path, but there's still some way to go. They're definitely in the battle for the merchant and consumer land grab. On the bottom left-hand side, we see the laggards. These organizations are way behind in terms of inputs and outputs and, culture, responsiveness, the ability to deliver those demonstrable results. I mean, on the face of it, they could probably well recognize the challenges ahead of them, but they're very weak in terms of the delivery of innovation, and they are falling behind the market when it comes to investing in the customer experience. Look, it's never a great place to be, irrespective of industry, but it most definitely is a very difficult position to be in the fast-moving market, such as payments. And then towards the right, we have the tech-led types of organizations. They do have a strong focus on investing in technology, but somewhat surprising to me, they are rarely market leaders in product innovation. And the researchers identified that they are weak when it comes to organizational and the cultural drivers of innovation. Maybe because the ideas and strategy as they relate to innovation are usually centrally driven and with a top-down type of mentality. And then we advance to the top right-hand corner, the advanced category. That they're quite clearly ahead in the market in terms of both of the right culture and the organizational structure to enable and facilitate innovation. And most crucially, they are delivering results from their investments in innovation. And finally, what the team at Ovum did is that they identified the top 10%, and they coined them the trailblazers. They are the most advanced of the most advanced in the market. And the key characteristics of the trailblazers are they are digitally led. They're in a business that's structured around driving innovation. They're most commonly the leaders in the adoption of technology and new service delivery. Now, I wouldn't be surprised if the majority of listeners are sort of making a mental calculation of where their organization would sit into these four key sectors, and we will definitely return to that point at the end of the webinar. So on this slide, we begin to see where the different players are in the payments value chain as they relate to the culture of innovation index. And again, to be clear on the methodology, we are talking about averages, not individual organizations. Obviously, there's some individual merchants in each type. So what are the call-outs? What's the key takeaways? So no one will be really too surprised that the fintechs are leading the field in innovation. Why? Simply, they're new. Most of them were born within the cloud-based era. There's marginal dependency on legacy systems. They have a low technical debt. They have a culture of openness and agility, which is embedded in their corporate DNA. So, I'm sure you'll agree, nothing too unexpected from this finding. But there are several further observations that I wanted to share with people today. Now, first of all, personally for me, it was a big surprise not to see merchants, and for us, that's a combination as part of this study, the combination of retail, telco, hospitality, and digital, and also PSPs in a strong position. Well, I would have thought that they would have been slightly diagonally to the right of this matrix. I mean, some of the most innovative organizations today are operating in the retail space, but conversely, the retail space also includes many companies that have failed or struggling to survive. Toys R Us, Sears, and Mothercare. So we might also begin to speculate that PSPs are probably focusing maybe a little bit too much on the short-term priorities, volume and scale, which means that they are lower placed than I would have originally thought. And I've heard my my US colleagues describe the dynamic of focusing on your nearest and most immediate challenges, dealing with the closest shark to the boat. And therefore, is it reasonable to state that they're placing innovation on the backseat at the expense of volume or scale? Look, another result that I was completely unprepared for was the high placement of corporate and retail banking. And what the research identified in banking is the impact of what is radical change in our consumer behavior, but also there's very strong evidence how regulation is now becoming a force for innovation, especially around open banking and real-time payments. I mean, me personally, I genuinely can't recall the last time I physically stepped into a bank, but together, but driven by changing consumer behavior, regulation, the challenger banks. On second examination, I guess these organizations do deserve their high ranking on the culture index, the innovation index. So increasingly, we do see intermediaries, and that's the group that PSPs are included, focusing on value-added services, the adjacencies, if you like, to basic acquiring and payment processing. Services like fraud protection, new apps, mobile wallets, new APMs, and finally, the adoption of AI. And over time, we're confident that this will help to move those types of players diagonally to the right of the innovation index over time. So before we talk more specifically about PSP innovation, I wanted to examine some of the innovation priorities of the merchants that they serve. And again, this is that aggregation of retail, telco, hospitality, and digital that was explained in the previous slide. For merchants, quite clearly, it's all about the consumer experience. Now, their focus above anything else is on how they meet the changing demands of customers, not only to attract new customers, but to retain their customers. Technology innovation is, well, you might describe it as it's almost liberating digital commerce by enabling consumers, you, us, and everyone in between to pay for the payment method they are most familiar with, irrespective of device, geography, or vertical. And increasingly, merchants are understanding that customers in different demographic groups, different geographies, are looking for different payment experience and payment options. And what the research suggested, it is the single biggest investment for over 1/4 of online merchants, and it remains a top 3 priority for over 50% of in-store merchants that were surveyed. And reassuringly, I would consider this to be a relatively solvable ask. Furthermore, we are seeing, and this is again substantiated in the research, the convergence of digital and in-store payment capabilities, and that's a clear driver for the merchants. In a way, the digitalization of the store is becoming a hugely important investment area, and merchants are looking to enable more mobile payments, whether that's supported through endless aisle apps, self-service kiosk, and other types of queue busting capabilities. That there is much clearer recognition also to deliver a seamless and consistent customer experience, regardless of channel. As buyers switch between channels to browse and buy, click and collect, in-store price checks, in-store returns, we see that actually increasing. Finally, what we are also witnessing is the use of voice and Internet of Things, IoT devices. They're becoming a much more significant differentiator for merchants. And amongst the trailblazing merchants, remember those top 10% performing, 50% plan to invest in some form of digital assistant, such as Alexa, and other forms of connected device to drive and increase sales in the coming years. Me personally, I haven't yet seen it in an operational mode. So what this slide represents, and not unsurprising to me or the majority of listeners, I would doubt, is that fraud and security concerns continue to influence innovation and the investment decisions by organizations within the payments value chain. As we sort of remind ourselves that probably one of, if not the most crucial consumer touch point during that shopping experience is the moment the customer is asked to pay for the goods that they wish to purchase. Now, merchants are broadly still left with two conflicting challenges or two interrelated challenges. It's also very much about driving the least amount of friction during the checkout process, and that will optimize conversion, but coupled with not exposing themselves to an unbearable financial risk. I mean, this remains that perennial challenge, and how to achieve the correct balance between a fast, elegant consumer payment experience and also strong protection against fraud is a critical issue for over 3/4 of the merchants. And that they're seeing some of these security concerns as fundamentally acting as a sort of a decelerator or even a brake on their ability to innovate. And despite the ongoing investment in fraud and risk management, 76% of merchants in our study believe that they are at greater risk of a data breach this year in comparison to last year. And that for me was a big surprise given the continual investment. So Alex, as I begin to pass back to you for the first panel session, sort of my midpoint statement is that digital transformation led by innovation is, well, it's a massive undertaking, especially for larger, more well-established companies. And it's just not as simple as recognizing and accepting the fact that, hey, guys, we're not very innovative. Let's be more innovative. It requires a cultural change and a mindset shift, and also some level of good fortune that organizations are backing the right innovation investments. So Alex, that's for the first panel session.
Yes, certainly, Richard. So thank you very much for those insights so far on the index. Very interesting. I can see there's been a few questions that have come in on that. So I just want to check that we've still got Jan, Florian, and Matt on the line, please.
Yes, we're here.
Yep.
Perfect. Okay, guys. So I think let's start with Matt, please. Matt, payment options are clearly a priority for merchant investments. What problems are merchants solving here?
Yeah, I think this is it's a quite an open question with regards to this. But before I jump into sort of discussing this, I wanted to discuss a point that was raised on the previous slide about consumer experience, and there was a mention of Uber. And I think if we actually look at a customer, everything has changed from a customer point of view. The way that we as customers consume information, the way that we get our news, the way that we travel, everything else like that has changed. And it's made things easier and simpler for me as an end customer. So I can now hail a taxi, I can order a takeaway, I can order food. Everything I get is now at the touch of a button instantly. And I think that's what customers are now expecting to experience in other walks, in other parts of their life. And I think we've also got the Amazon to thank for this in terms of that sort of one-click instant experience. So I think that's the changing consumer is really important to remember when you are looking at ways of innovating, and it's important to understand that, or to prioritize based on what the customer is expecting. So in terms of how merchants or in this case PSPs will sort of tier innovation, look at the problems that they're solving. So am I making it easier for a customer to get from point A to point B? Am I protecting the customer from a security aspect? Am I adding anything for the customer experience? Am I giving them a sense of delight, a sense of joy? So I think it's very important to understand that when you are looking at innovation, it needs to be done for a reason. And I think the biggest reason for this is that shift in consumers. It's no longer the sort of case where you can just essentially get away with a poor customer experience online, because if you're giving them a poor customer experience, your competitors are giving them a better experience. They're going to shift across to there. So that's kind of my take on it. Yes,
I think marrying customer experience or consumer experience from other industries is the sort of key here in terms of payments. So thank you for that. Jan, let's ask you the following question. Where are you seeing merchant innovation, and what are some of the challenges faced by merchants around payments infrastructure? And furthermore to that, how can PSPs help merchants retain the flexibility to adapt to future changes in consumer demand?
Yes, so maybe to your first question, so where do I see merchant innovation? Well, basically everywhere. So even in places where I would have never looked before. So even these digital laggards that you have outlined in the previous slide, so such as insurance companies that scored really low, well, even they innovate right now by introducing new payment options outside of ACH and direct debit, which is something I would have never thought of 5 years ago. And there's a general, amongst all merchants, a common understanding that payment optimization actually drives growth. And this new understanding actually creates budgets to innovate, to invest, especially in optimized customer journeys. So omnichannel, for instance, is no longer just a buzzword. S-commerce is on the rise. Investing in seamless solutions to make consumers happy is a priority pretty much amongst all merchants, I would say. And we also see even like merchants in the same vertical that there's a race amongst these merchants to be the first to introduce, for example, a new payment option. We especially saw that with Apple Pay, for instance. But there's still challenges, and the challenges are basically the same that they have been for years. So actually taking innovative ideas and creating actual solutions out of them, that's still a difficulty. So many organizations have a problem because they have limited payment-specific know-how within the organization, and especially, let's take insurance companies again, they probably don't have the most savvy individuals in their payment department because these people would probably rather work for Amazon, for instance. So, and even if they do have these individuals, then there's still so many independencies, front and back end, their ERP system, you name it. And so therefore, I would sum it up with time to market issues that are still there. Everything takes forever. Another question that you asked was around PSPs. So how can they help? Well, they can at least try to help, especially with these time to market issues. So that can be around taking away certain pains and headaches. So, for example, creating a collecting model so that the merchant doesn't have to figure out how to unify payouts, or taking away certain other tedious processes such as contracting with APMs. And just simply a PSP can be their thought leader to anticipate future changes and that change consumer demand. That's basically how PSPs can help overcome some of these challenges, I would say.
Sure, perhaps PSPs have a greater part to play than they think they currently do. Okay, thanks Jan Florian. So Matt, we'll move on to another question for you. What's Klarna's experience of how merchants should be thinking about capturing and keeping consumers across different demographics, and perhaps with some particular thoughts on the duty of care for younger consumers?
Yeah, I think it's another great question, and I think this comes back to knowing who the end customer is. I think one of the problems that many retailers will face is you don't understand, or they don't understand or know who their actual customer is. You might have an understanding of my average customer is a 30 to 45-year-old male, medium income of X, but actually you've got demographics well outside of that sort of core that are browsing and potentially trying to buy from the site or in store. So I think knowing the end customer is really important, and that's where I think gathering or collecting the correct data, but also having the nous or the ability to understand and utilize that data is really important. I also think it's really something that gets missed quite often is we're starting to see the emergence of these younger demographics into new sectors, verticals, or areas where previously they wouldn't have been sort of noted. So these are traditionally those sectors with the higher average age or the older demographics, but we are starting to see the sort of younger ones amongst us move into these spaces, and that creates its own challenges from a merchant perspective and also from a partner perspective. So they're expecting, again, the experience to be seamless, et cetera, but also that they don't have the same understanding of how the world works or how finance, et cetera, works. So there's definitely a duty of care, and this is again about understanding who the customer is. Is this customer legitimate? Are they understanding? Do they know what the purchase is about, et cetera, et cetera? So there's lots of sort of different nuances to that, and I think it all comes back to, first of all, understanding who your consumer is and giving them that tailored experience. It's no longer a case where you can just have a single customer view on site for every single customer. It now needs to be a single customer view for a single demographic. At least that's what we're seeing from the retailers who are sort of experiencing the best results, are those that have really understood who, first of all, their core demographic is now, and also who they can attract and acquire earlier on in the journey.
Thank you for that. That's a very full and honest answer to a tricky question. Thanks, Matt. Okay, just one quick question for Richard before we move on. Just taking a look at the fraud piece, I think it's pretty clear that regulation is continuing to add pressure for the merchants. So how can PSPs help merchants, steer a better path that ensures compliance without jeopardizing this customer experience that we're discussing?
Yeah, thanks, Alex. It's quite an obvious question, but I don't think there's such an obvious answer. My view is that we need to work in partnership rather than silos. I think this has been sort of translated into the Q&A. We need to work together. We are trying to solve an industry-wide problem in terms of the exposure to more risk, the exposure to other types of fraudulent activity. So it's not a question that does have the simple answer as I explained, but I think if we recognize that we should be working closer together, I think fraud is always going to be present in our market. It's just trying to realize what is an acceptable level of fraud as we try and marry what is the demand for an elegant, frictionless payment experience, with also accepting that we need a tolerable level of exposure to risk.
Okay, thank you, Richard. Okay, so just want to remind everyone listening that this will be, or we have a live Q&A coming up. So if you have any questions, please just use the portal at any point to pose those questions, and we'll come around to those as we have done in this panel. So Richard, I think it's back to you for the second slides, or second set of slides.
Indeed, yeah, thanks, Alex. So in the second part of our webinar, we're going to look at the research findings in terms of PSP innovation. And the questions the research was looking to answer are, what are fundamentally the characteristics that distinguish the most innovative PSPs from perhaps their less innovative competitors? What sets them apart? What helps them to be more successful? What gives them the path to success in terms of innovation? And what this slide represents is the 7 key characteristics or habits of trailblazing PSPs. Those are the top 10%. And I want to be clear here that none of the 7 alone, if you hit them out the park, will set an organization apart. They have to be taken in their totality, and they give us a really good insight into the attitudes and behaviors of the most innovative companies and PSPs. So the first one is really related to having a central department and or individual that's tasked with driving innovation forward, and maybe a center of excellence, if you like. And the research suggested that 64% of PSPs in this trailblazing group see this as the most important source of innovation in their organization. An innovation office with a defined budget and a defined headcount. And in the weaker performing PSPs organization, innovation wasn't specifically owned. Of course, it was a key focus, but it was never anyone's number one focus. So the next key characteristic is having a culture that puts the customer front and center and is able to respond quickly to changing customer demands and market dynamics. And that's basically, notionally having that agile culture. Third is a company-wide engagement with new technology, and it's company-wide, and that's the key here. technology is just not the preserve of a single group, or it's generally something which all employees are looking to be engaged in and to drive improvement, to be more responsive. It's not exclusive to the IT department or the bunch of geeks in some organizational business unit. You just don't hear, I don't do tech in these types of trailblazing PSPs and intermediaries. In the fourth, it's like that the employees are trained to support. I mean, it's much more cohesive. There's a strong level of harmonization in terms of driving new innovation. And fifth, what we saw in the research that nearly 2/3 of the trailblazing companies are specifically training their employees to support innovation. And again, this is a company-wide initiative, and it needs to be coupled with a culture and a working environment that allows their staff to learn. You know, that we hear about they fail fast and then reiterate and then move forward. So there's a specific training budget, there's an incubator lab, there's an allocation of time for special ops. So they're all factors that are characteristic of a highly innovative PSP. So fifth and sixth, it's about bringing new products and services to the market. That's a core business objective. It sounds like obvious for every PSP in our study, but what it does demand is an IT and project delivery department that can deliver continuous and agile innovation. So if you want to perform well on this index, you've got to pay attention to the IT department, and they've got to really ride in parallel with you. And finally, the seventh characteristic of the trailblazing PSPs, and this to me is a really critical point, it's around investment. And it matters not that it's just rapid and efficient delivery of innovative services, but these services need to be focused on the customer, the consumer, and these new services and innovations enhance the customer experience. In other words, you might frame it as the innovation driven by customer centricity. It's definitely not about thinking processes to become more efficient and lower per unit cost. It's bringing new products and services to market. So what this slide talks to is for all PSPs and where they're investing and focusing their innovation efforts, most especially as a response, and should come as no surprise, to the demands of their customers, their merchants. So in parallel with the merchant needs, we're seeing that nearly 70%, 69% of PSPs, the delivery of a frictionless payment experience as one of their top 3 investment priorities. And it was somewhat surprising to me. I thought it would be much higher because it's a common issue in terms of the dialogue and communication we at ACI are having with our customers in the marketplace generally. So 69% seems high. I would have just assumed it would have been even higher. Also, another way that we might be enhancing the customer experience is based on leveraging the transaction data to ensure that there's a smoother payment flow. And 44% of the PSPs in this survey are focusing investments in this particular area. Over half, 56% of PSPs do plan to do more around intelligent transaction routing and stronger fraud detection. And again, this just reflects merchant demand. We're trying to ensure that the checkout is optimized for the least cost possible. So you might argue it's fundamentally about leveraging some of that transaction data, translating it into business analytics to fundamentally drive better decision making. Of course, we're seeing an increased use of the cloud, and that's the plan for both merchants and PSP. So that didn't come as a great surprise. And most definitely, there's strong investment around innovation with real-time payments, and this is a key emerging area. Again, responding to the needs of merchants for lower payment acceptance costs and more rapid settlement. However, what we're seeing as somewhat of a break on this sort of innovation is that there's a poor harmonization on regulation and technical standards, and that's causing delay. Also, the research suggests that we've yet to see the real impact of open banking. There's yet to be a clearly identifiable consumer demand for real-time payments and across the market. But 100% of PSPs that were interviewed agreed that open banking and had inspired some level of fresh thinking about how payment services should be provided and consumed by their merchants. So Alex, so before I hand back to you for the final session, I just really wanted to move on to the innovation index. So let me just find out. Yeah. So, I called it out at the beginning of the session. I'm sure most of the people are wondering where you might sit or your organization sits in the innovation index. It is a fascinating exercise. You can find out how you might on a form of blind self-assessment. It's quite a straightforward tool to use. So you can understand your position, you can benchmark your company against the ones in our study, and you maybe even begin to help you develop your own transformational roadmap. This is available on the ACI website, and there's access to a different bunch of ebooks that we've created to supplement the research by Ovum. So I generally hope everyone takes advantage of these assets, and we'll be happy to discuss with anyone more about the detail and the content. So Alex, look, as I pass back to you for the final panel session, my own interpretation of the research as it specifically relates to PSVs is that they should really be increasing their appreciation of innovation, both what it could do for them and their volume and growth strategies, but also to delight and win new customers. And that's both from an input and output perspective. Now, executing that cultural shift and mindset will certainly ensure that PSVs will become an even bigger and key enabler of merchant growth. So, Alex, let's open the discussion and see how these research findings resonate with the panel and the wider audience in general.
Yeah, great. Thanks, Richard. And I would just second that this presentation will be shared afterwards. So for those of you that were trying to scribble down the link there that Richard just showed, not to worry, it'll be available to you and live just shortly after we have this webinar concluded. Also, we're moving into the part of the webinar where we're doing kind of live panel and Q&A. So if you haven't, or if you have a question and you haven't placed it yet, then feel free to use the portal and get them coming in. So, as everyone has pointed out, Richard in particular with the slides, we've talked a lot about innovation. With innovation comes investment. So Jan, hopefully we still have you and Matt on the line. I'm going to start with you on this occasion. What would you say are the key priorities for PSPs as they think about their own investment and the innovation that comes from it?
Yeah, sure. So some of the things that were just mentioned, I mean, I would totally second. So any investment that actually enhance the end consumer convenience and that speeds up the checkout process, I mean, make a whole lot of sense. So this could mean that PSPs reduce time to market, for instance, by investing into a collecting model, for instance. So there, the actual investment would be, for instance, a PI license, tools around reconciliation, time that needs to be invested for legal resources, for contracting with alternative payment methods. All of that could be items for PSPs to invest into. And especially since there are quite a few PSPs out there today, I mean, investing into a unique value proposition or creating a unique value proposition would be definitely something of interest, I would say. so creating and enabling certain niche cases could make sense. So overall, I would say, I mean, anything that comes and enhances the end consumer process, so mimicking the Amazon-like processes, are things that PSPs should definitely consider when thinking about their investments.
Thank you. You mentioned APMs there, or alternative payment methods. Matt, we've got a nice short question for you here. What should be the role of PSPs in guiding their merchants on alternative payment method choices?
I think this is a huge opportunity for PSPs to deepen that relationship with their end clients, to be a knowledge sharer rather than just a technology provider, and really add value back into that relationship. Obviously, the more value that you add back into the relationship, the stickier the relationship becomes, and therefore the less likely to churn. So I think PSPs are in a really unique position in that quite often end clients trust these PSPs. They've been with the PSPs for a long time. It's a real opportunity to utilize the network and the knowledge base and share this amongst their clients and deepen that relationship. And I think it's quite interesting from our perspective at Klarna. We work with a number of different PSPs, and the ones that we work with the best are those that are actively sharing ideas with their end merchants, in essence challenging them rather than waiting for these retailers to come to them with a challenge. These PSPs are going out and saying, have you as merchant X thought about offering this, or have you thought about offering this? And it all comes back to that consumer improvement, the overall improvement of the consumer experience. From a PSP perspective, the consumer experience is your retailers. So it's anything that you can do to make their lives easier is obviously a benefit for you, and then it reduces the churn. So I think it's a great opportunity, and we've seen some really strong examples of PSPs really using this to deepen that relationship and make it stickier.
All right, thanks, Matt. Okay, so we have a technical question which has come in. It's quite long, so panelists, get your ears ready. I'll read it out, and I think, Richard, we'll start with you on this one. The question is, merchant acquirers and PSPs are planning the biggest moves towards the use of cloud in the coming years. Given that none of the public cloud providers support payments HSMs, what are the plans for these acquirers and PSPs to address this gap when deploying their systems in the cloud?
Well, thanks, Alex. Could you ask me one on sport? I'm sure I'll be better positioned to answer that. So, it was called out in the slides. I mean, quite honestly, I'd probably ideally placed to respond to the specific question. We are seeing, a migration, and one of the call-outs from the very early slides that I presented is that the most innovative organizations are the ones that are already using on-cloud, on-demand facilities. So they've got less reliance on and less technical debt on legacy systems. So that's a very sort of quick response to a very detailed question. Certainly in our own organization at ATI, those types of issues are consuming more and more resource as we get our head around the technology shift to on-cloud versus on-prem.
Okay, and Jan, do you have anything that you'd like to add on that?
I was hoping you wouldn't ask me. so no, not really. I don't have anything really of value to add.
Okay, thanks. Matt, anything at all? Otherwise, I mean, what I would say on this question is we capture all the questions, and then we will respond to them all privately with a proper follow-up. So this is quite a detailed technical question, so thanks for asking it, and we will make sure that we respond with something from the team here in terms of responding to that correctly. Okay, so let's move on. It's an easier one, right? But it's still for the three of you. Let's start with Matt this time. What is your opinion of blockchain technology in the payment space?
Yeah, I mean, this is actually a really interesting topic from our perspective. You could almost talk about this for half an hour, 45 minutes. I think it has huge potential. It has huge potential to grow it to make processing from a processor perspective cheaper, faster, easier, more transparent. I think at this stage there's probably still slightly too many questions or grey areas. But I know from a Klarna perspective, it's something that we're investigating and investing in heavily, because from an end consumer perspective, if I'm making those payments quicker, if I'm making those payments cheaper, then it also has positive impacts from a business perspective. So whilst we're sort of actively looking and investigating on it, then we can essentially, once we find somewhere to invest, then obviously we'll roll that out on a wider space.
Okay, yeah, I think speed of the processing of payments on the blockchain is an issue, or at least from my understanding of the matter. Jan, do you have any thoughts on blockchain technology and payments?
Yeah, I mean, actually, I was on a panel a few years ago where I predicted that this would be something that is really taking off really soon, and it really hasn't so much. But I still think it has huge potential. So, I mean, also not next to speed, there is limit to no possibility of fraud, which is great. Then it's cheap. So therefore, I mean, it has all the capabilities to really help in the payment process. And I would still say that it's going to take off soon, but I guess when this is especially taking place, I would no longer say. But yeah, it has huge potentials.
Okay, thanks. Richard, finally, from the ACI perspective, blockchain in payments?
Slightly different perspective, perhaps to Jan. I'm not seeing the acceleration of the adoption of such technology perhaps as quickly as we first perceived. Personal view, I don't know if that in a way because of the form of contamination from the cryptocurrencies and some of the negative press around that. So I wait to be 100% convinced about where it has a place within the payments value chain from an overall perspective.
Yeah, thank you. I mean, again, just my understanding is that that it looks a reasonably inexpensive option, but when you move to the kind of processing speeds that we have on payments at the moment, the amount of servers and racks that you need, and the cooling and all of those other nice bits and bobs that come with server farms, the cost and the speed the cost becomes astronomical just to match the speed of payments today. There's been a change here. Let's go for this one. Let me have a quick read of what happened. Okay, open banking. It was always going to crop up, so let's start with Jan on this one. Are you ready? What has happened for the issue of international payments to evolve since open banking is not a norm in all countries?
Can you please repeat the question once more?
What has to happen for the issue of international payments to evolve? I think the question is around open banking. So open banking, I think, is being viewed as an opportunity to open up international payments for domestic payments to evolve faster and with a kind of better regulatory infrastructure. But since this is not the norm, are there any other elements that could help push international payments?
Well, I mean, I think open banking will actually help with payments, especially when you think about lending processes. So, for example, what also Arvato has invested into is enabling ways where lending decisions or credit decisions can be made much quicker, much faster. So I do think that this will eventually actually change things quite a bit. and quite a bit to the better for the end consumers. So that's maybe what I would like to add to this question.
Okay, thank you. Matt, I'm guessing that Klarna has got some secret activities going on around open banking and how you plan to use it throughout Europe and possibly further abroad. Anything to add on open banking?
Yeah, I just basically second exactly what Jan has said thus far on it. And from our side, there's lots of different internal projects going on at the moment in terms of how we can maximize the use. Again, with that end consumer and customer at the heart of everything. So I can't go into too much detail on that. Otherwise, I probably would be signing on Monday. But let's just say it's a huge area of innovation for all payments, or everyone in the payments sector, but especially for those who want to improve the overall experience. I think the opportunity is there. It's just tying up the ends, especially for locations where perhaps open banking isn't at the forefront.
Sure. And Richard, given your interest or in omnichannel, and given that omnichannel was only maybe 2 years ago that was really creating all the headlines and everyone was talking about that, open banking has come along. Is it an opportunity in omnichannel and from the open banking perspective and with your fraud hat on? Do you see open banking as being good for business in terms of the payments business in its whole?
Well, absolutely. I mean, the comments from Jan and Matt, I'm in total agreement with. But I think if I answer the original question, I think it's what's causing the slow adoption or delay, and fundamentally it's a lack of harmonization around the regulation and technical standards. And until us and the key stakeholders and the wider organization get our head around that, I think that we are missing massive opportunity in terms of delighting the end consumer and also driving cost out of the payments industry.
Okay, thank you. So, Jan, we've started on the open banking conversation, so we'll stick with it, but we'll throw in real-time payments as well. What do you think open banking and real-time payments, what do you think the implications are for the PSP community, and is Arvato investing in those areas?
Well, I do see use cases where it makes a lot of sense. So real-time payments are, for instance, important when certain things need to be consumed immediately. So we see this, for example, as an ask from insurance companies that want to know that funds are there right now, right then, when a certain policy is being signed, for instance, or in other digital processes when certain things are being released right away, and there shall not be a way to charge money back. So we do see the use cases, and we do also see an ask for it, but that it's really taking off and that we have a ton of inquiries and that makes us really invest into real-time payments heavily. That's not really the case at the moment.
Okay, thank you. All right, we're drawing to an end, so I've got a couple more here. Matt, given that you're working at Klarna, this might be a difficult one to answer, but does it really matter if a PSP isn't seen as particularly innovative?
Yeah, I think you could almost take the PSP part out of this question and just put company in there or provider, and then ask yourself the same question if you're sort of the user of said provider. So if someone that you're working with was seen as particularly non-innovative or didn't really care about innovation or use it or invest in it, I guess the question is what would you do? And that's sort of a rhetorical question to the listeners or the viewers at the moment. But from our perspective, I think it becomes very clear for us the PSPs that are innovating for the sake of innovating, or because it's seen as required or a necessity to sort of pump out the numbers, and those who really believe in it. And I think that's where you start to see the difference, and you'll start to see a wider gap between those who are really in a sort of league of their own, and then those that are playing catch up. And I think as that gap widens, the investment required to narrow that gap increases. And I think most PSPs are sort of well down the road of innovation, but again, it comes back to making sure you're innovating for or in the correct manner alongside the correct partners. Otherwise, competitors will be doing it. It's exactly the same as almost any other industry or sector or provider. If you're not innovating, someone else is, and then eventually the customers will end up there. So yeah, I think it's hugely important that they're innovating. It's also a case of making sure the innovation is in the right sectors or the right areas and not just for the sake of it.
Great, thank you, Matt. All right, so finally, Richard, perhaps you could, as an answer to the final question, summarize the challenges for PSPs in supporting merchants into the future.
Yeah, sure. I think that's a good way to end the webinar today. Look, I think the disruption is constant. The pace of disruption is somewhat unprecedented. The payment landscape is going to look significantly different in another 5 and 10 years' time. So the challenges for PSPs is quite significant, and it's an ongoing challenge. And I think if PSPs accept that, then it becomes less insurmountable. We can't work in silos. We have to embrace it, and finally accept it. You will fail, but as long as you fail fast. So the challenges for PSPs are as broad as they're as wide. They're as deep as they are shallow. But we just have to confront those, and I'm sure they're just never as insurmountable as you first perceive.
Brilliant. Thank you, Richard. Okay, so we have reached the end. I'd like to thank everyone for logging on and taking time to listen to the insights that have been offered today. I'd like to thank all of those people that posed their questions. It's great to pick some of those out and get those answered. Again, thanks to ACI for sponsoring this webinar and making it possible. And finally, to Richard, Jan Florian Richard, and Matt Scott, thank you very much, and we look forward to hearing from you in the next webinar.
Thank you, everyone. Thank you, Alex.
Thank you.
Thank you.